The major markets closed unchanged to slightly lower last week, as the indices struggled to trade into higher highs amidst various economic news. The S&P 500 crossed the 4,200 level for the first time last week, with an all-time intraday high of 42,1878. Below the surface, the results were mixed, as 2 of the 11 sectors ended lower, about as many closed unchanged, and 5 sectors closed noticeably higher. The losses in healthcare and information technology, especially the latter, were enough to temper the gains of the other sectors within the S&P 500. Some of the largest S&P 500 holdings, like the top 7 holdings of Apple, Microsoft, Amazon, Alphabet, Facebook, and Tesla, and around 900 other companies reported earnings and forward-looking guidance. But these results did little to stimulate an already stimulated market. This has led some analysts to view the Q1 earnings results as priced in, or already considered and anticipated, and therefore already reflective of the current price. This week we'll see the largest number of companies reporting, as another 1,460 companies will post their Q1 earnings, after which the number of companies reporting rapidly decreases over the next 2 weeks. In further economic news, on Wednesday, Jerome Powell communicated no change in the Fed's current path to stimulate the market, saying, "The sectors of the economy most adversely affected by the pandemic remain weak, but have shown improvement. While the recovery has progressed more quickly than generally expected, it remains uneven and far from complete." Surprisingly, first quarter GDP was released Thursday with a headline reading of 6.4%, below the estimates of 6.5%. This reading was even after the $1.8 trillion stimulus payments went into effect for many Americans. Moreover, this impact can be seen in the BEA's personal income report. March's month-over-month change saw a record 21% increase in the personal income rate. For perspective, the top 3 monthly increases in this report, going back to the 1950s, took place within the last 12 months, and all reflect multiples of any single prior reading. Nevertheless, Friday's Consumer Price Index reflected a modest 0.6% rise, with that number falling to 0.3% when excluding food and energy.